Diamondback Energy is a $41 billion market cap energy company, and their P ratio looks pretty attractive, 10.15 for the current year, 12.94 next year. Based on earnings per share, analysts think it's discounted by 33%. And this company pays a dividend of 3.79. A lot of things look good for the stock, but the stock has been selling off for the last year. It is doing well for the last 5 years. That's been the story with these energy stocks. Top line revenue is growing really nicely, but the free cash flow isn't all that great. That is where I'm kind of disappointed or unsatisfied with this particular stock. You see, they haven't had a consistent high cash flow generation like its peers in the same industry. So that is an area of concern. And I use free cash flows as the principal valuation number when I calculate that. The other numbers look quite good. Margins look good. The profit looks good. I think the company has to put a lot of their capital back into the business, which is what is drying up that free cash flow. Analyst, 19 of them cover the stock and they like the stock. Every analyst believes it's worth more than the current stock price. On average, the consensus is that they have a 33.8% discount available on this stock price. The forecast looks good. They're going to keep growing, which looks good, and they're going to expand their profits. So earnings per share look great for this business. But again, the free cash flows is where this business is not looking all that great. When I run the valuation for Diamondback, I get a value per share that is 11% lower than their current stock price. So in other words, investors would have to pay a premium of 11% to buy this stock. The reason for it, cash flows. The company doesn't produce really high cash flows, and that's the principal way that I value businesses. And it's good to look at a long list of energy companies so we can compare which company has better fundamentals. And FANG, Diamondback Energy, based on the free cash flow fundamentals, is looking like a less desirable business compared to its peers.